The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to take a look at the German DAX first, and then again with the UK FTSE. You can see those are each making on the smaller time frames, making a three drive to a top. The FTSE's also very important because it hit the 78% retracement level. The DAX went slightly above it, but since that time, the DAX has sold off more than 150 points. We'll see what happens with that as we go through. Now at 9:30, hopefully, we're going to have Trader Tom. Tom Hugard will be our guest for a few minutes, and he'll chat with us about what he's looking at in the markets. We've had a lot of things happening. It looks like the virus thing is going to be over. Gilead has evidently come up with a virus-free vaccine, and we're all going to be healthy, wealthy, and wise once again, and everything's wonderful in Camelot once again. I'm going to show you one chart, folks. You make up your mind what you want to do with it, but I'm just going to send it to you. We had a downgrade today. I think it's the first downgrade since Moses was floating down the Nile. And you can see here, this is Apple going back to the top. We made up there at 328. We came down to 212. We made this 135 pattern. You can see the 61% retracement here. But look very closely, folks, at the little ABCD. Well, it's not a little one. It goes back to the 22nd of March when we made the big bottom. It's a perfect ABCD to the exact price. And it happened, are you ready for this? 4 days ago. So with all this going on, excuse me, with all this going on, Apple, the number one stock in the whole Gamilla, is not acting as strong as the rest of them. But heck, I don't know if that means anything or not. Okay, one other one that we'll take a look at, and then we got to go into story time. Today is going to be story time. I had a request for something, and it brought out a lot of memories, and so I wanted to be able to get this to you right here. Here's where we were last night. I think it's important to pay attention to this because if you like ABCDs, you can see the one between the 12th and the 17th. There's an ABCD pattern up there, a three drive to a top pattern, just absolutely perfectly. There's a double ABCD, but the actual price on this one came in at $28.85, folks. The high was $28.86. And what we suggested in the video was wait for that top to come in, wait for a retracement, and sell the rally back, which came in at $28.75. There was a 61% retracement. It's now trading 20 handles lower, I believe, or close to it. I don't even remember now because I can't see the prices. But if you're in that, don't put your stop at break even. And well, no, you got to put your stop at the high, 28.86, because you got to give it a little bit of room because that's a really big pattern, and it took some time to complete. And remember, when the market was making its top up there, if you remember way back in January, I believe. Is that when it was? January 29th or February 2nd, we were making that big ABCD pattern also. We've got one other one that's interesting here that we'll take a look at, and I want to make it through the break here, I guess, and then I'll get started here. Here is the gold market. As you'll notice here, we've just completed the second ABCD retracement since the 15th of March. The first one came in at the 50% level. This one came in at the 38% level to the exact price, folks, within a half a dollar at $16.98. And we rallied up to 17.18 so far this morning, and we're going to see if this is going to be, the really big one that makes this market explode to the upside. So if you see gold below 16.95, that is not good, and then you'll find out what metal it really has in it, in the yellow metal. So we'll look at it 1 second here. Hold on. If you have any questions, and I know many of you do, 877-927-6648. We'll keep a close eye on these things. And remember, in the land of the blind, the one-eyed man is king. The news now has turned relatively positive, folks. Believe it or not, we've had this rally that's lasted 2 weeks, and now we're starting to see some positive things. Maybe the end of the world is not in sight. So we'll have to wait and see what happens to these things as we go through looking at these markets each day. I have a bigger view of this S&P here. I wanted to bring it up here and show you because it was such a perfect one that it was worthy of looking at it. And also I posted a video. I'll put this video in here that I did last night around. I think it was 8 o'clock East. It was 11 o'clock Eastern time of what was going on. Bob is asking about corn. Bob, stay tuned, Bob, for the newsletter this week because there's some. In fact, this next segment. Pay attention. Well, you don't have to pay attention to it, but it's going to take you down memory lane a little bit. But you're right. The Christmas corn is ready. That's basically. We put out a buy. Might as well tell you folks that the Christmas corn's got everything you could ask in it, folks. If you like ABCD patterns, and I know some of you do, pay close attention to the old Christmas or July corn because 325 was that was the number. You get to be a farmer at that time. You don't have to buy the farm. You don't have to buy the land. You don't have to lease the land. You don't have to lease the equipment. You don't have to hire people. All you do is you're going to buy 200 acres of the sweetest farmland in Iowa, Illinois, and Indiana, the old 3I League, and then you hold on for a while. Now, if you remember, we did have a $4,000 rally last year in the midst of a really oversupply of corn. And believe me, folks, the world is not going to stop eating. In contrast, there's going to be a lot of problems in this meat market for 3-4 months down the road when the economy, if it ever does get back on its feet, starts to buy again, the things that you like to eat and go out to the restaurants and stuff like that. But if you get the newsletter this week, pay really close attention to the July corn. And if you're a member of 24/7, you should already be long the corn. And we'll see what's happening. It costs you a total of about $750 to be in this. You got to put a stop in at around 310. We're already below the cost of production. We haven't been this low in quite a few years. And with prices going up for the farmers, it's been a lot different. I had a request about silver. I wanted to bring this to your attention because, I've been relatively bearish. Yeah, I know 14 degrees in Denver this morning. My daughter told me that they were expecting expecting some snow. Here's a head and shoulders pattern. This is a 30-minute chart over the last 6 days. You can see it's perfectly symmetrical. What's good about this is you see the right shoulder is lower than the left shoulder. It comes in right at just about an exact 50% retracement and gives a price objective down here at around $14.95 in the silver. Remember, the long-term daily 61% retracement on this came in at $16.11, and we did pop up on the 14th. We did get up to $16.29 and immediately reversed. So those are some of the things that we've been watching in the precious metals market. We're going to take a little break and head down memory lane. Get your tea and coffee ready, folks, because we're going to gather around the fireside. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart of soybeans going back to 1970. A couple things I want to remind you here. You can see the Russian grain robbery. Soybeans went from about $2.50 all the way up to almost the beans in the teens. They were supposed to get to $13. I think they got to $12.99 or something like that in the nearby July contract. But you see where it started there in around 1973. Hold it, maybe we've got a caller. Hold on just a thing. Yes, you're right, Mr. Z. The July corn is flat out spot on. You just can't ask for anything better. But you'll notice that big explosive move there. Interesting story. That is where we had a big explosive move to the upside. It basically started by Ricky the Rocket Barnes. Made $1 billion over the last 40 years, but he was in the pit and he was trading through Haymeyer. I can't remember the name of that oil company. Doggone it. Shucks. It was Rosenthal. Anyway, he was in debit balance. He actually owed the firm something. Something like 20 grand or something like that. And he came into the soybean pit in July soybeans, and he started bidding as much as he could. He went to, I think, remember, this was before the CFTC, before the NFA. All this stuff was based on trust, and the member firms were the people that orchestrated everything and kept all the rules. But he started bidding, and the market just took off. And not only did he come out with a debit balance, he was able to ride it up, and he made an absolute fortune. And that's how he got the nickname of bid a billion barns, and bid a million barns, because he was bidding for 1 million bushels. And at that time, I believe it was a 2 million bushel limit, as I recall, but that's neither here nor there. Here's where I want to show you, folks. You see the where it says 618 and the arrows there and the Gartleys there. You can see the ABCD pattern. Okay, this was right after I had learned my lesson in money management, and this was it was about March or April of 1975. And you can see the big ABCD Gartley there perfectly. And two of my mentors, Dave Nelson and Oscar McClure were teaching me, about how to do fundamentals, which, I kept it, I really just watched them because they were expert soybean traders and they were following weather and anchovy patterns and all this stuff. And but I was working for Eli Lilly, and Eli Lilly's home office, and it still is in Pasadena, California. And in Pasadena, California is where Dave Nelson had his office. And right next door to Dave Nelson was none other than Earl Haddady and Jim Sibbett. They ran Sibbett Haddady Publications, and Earl wrote a little pamphlet of about 18 pages way back in the 60s about the opening price. And that's the thing that John Hill and I, based the work that we did on that. And then Toby Crable, who was working with John Hill's son, came out with his book, The Opening Price Principle. And that book is, still good. But, with the overnight markets, it's not nearly, works better in stocks than anything else, but it still does work. But you can see here that we had this Gartley pattern forming. And what I was doing, I was looking at the technical pattern. And what Oscar and Dave tried to show me is the fact that these fundamentals were really starting to turn, and the rest of the world hadn't seen it. And it gave an opportunity to go in the oil spreads, being long July oil and short December oil. And you were buying them at a it was backwardation. So the December oil was much more expensive than the July oil. So if you bought July and sold December, the only thing you could lose on was storage, and storage prices at those times was very, very cheap. And so it was really basically a no-risk trade. You could put the trade on. Remember, the margins were by the exchanges or by the members, and so for $90, that was the margin on, I was saying $90 or $100, you could buy oil spreads. You could go long July and short December, and that's what happened. And then you could see, the market started to go up, and that ended in 1976. In about March, no, it was June of '76 is when we sold out everything, and then I went to work for Drexel Burnham Lambert, and that's pretty good. But it was very interesting because I got to know Jim Sibbett and Earl Haddady quite well. And, these these guys wore suits and ties. Oscar McClure, he wore suspenders and a little bow tie and very expensive suits. But they wore suits and ties. They were professional traders, and that's what they did. And I lived in that era, and I thank God for being able to live during that time and to know, to see some of these things that these folks did. I got very lucky along the way. My two lucky spots were I sold out right at the high that day in June of 1976, and I took a couple months off to enjoy coming back from the dead, so to speak, and then I went to work for Drexel Burnham in August of 1976 and moved the operation into gold and silver, and then got lucky again too. I've been lucky my whole darn life, so I have I shouldn't do any complaining, which I do a little complaining, but not very much. I'm actually quite blessed to do what I do. I get to play every day because work is my play. And that's the way it just happens to be. So anyway, that's the story behind that. You can see the big moves that we had through here. And folks, the reason why I'm mentioning this, if you're listening to if you're a member of the 24/7, be sure that you look at the futures this week, because believe it or not, you see that little 618 on the Gartley, and you see that Gartley pattern right there. Sometimes these markets repeat over and over again, don't they, boys and girls? They really do. It's hard to believe that they really do, but they really do. So let's just take a look at some of these. We're going to take a look at new crop beans right now. Whoops, these are not new crop beans. Hold on one second here. This is old crop beans. Hold on a second. Give me these up. Whoa, just a minute here. All righty, get this up here, and you'll be able to see here. These are new crop beans, folks, because they're harvested in September, October. These are November 20s. You'll notice there's a little Gartley pattern here. I'm gonna dissect this puppy like with an old scalpel, hopefully not a rusty one, and we're going to be able to look at it. These folks here, I don't know who these folks are, but it was sent to me by Rich Anderson. They're looking for a price of $8.12, and we're trading at around $8.50 right now. And I believe if you believe in Gartley patterns, this is the first legitimate buy pattern we've had in beans since Hector was a pup, and that dog's 18 years old. So this is going to be really interesting here, that this Gartley farming. So we need to pay very, very close attention to it, and we'll be watching it very, very closely. Okay, let's move on here. Someone asked a question about the soybean oil. The soybean oil has already been pretty nice to us already. You notice that this is one of the things that we did do, because in the soybean oil, you'll see that we bottomed back on the 16th when the rest of the stock market did. And, we've had a, $1,800 rally, and it's still moving in that direction. But the beans and oil, or the oil and the meal are acting very differently. Remember, when you crush a soybean plant, it's 80% meal and 20% oil, but there's some residual in there, but it's basically 80-20. So most of the value is in the meal, which is tofu. It's 100% protein. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, we're back, folks, and I think we have Trader Tom on the line. Tom, are you there?
Yeah, I am, and your phone is ringing.
That's okay.
Hello.
That's probably a margin call. No, I'm just teasing. Tom, we have a question from one of our listeners, and that is, can you make any sense of what's going on out there?
No. After the spike last night, I tried to get clever on this story that broke, and I'm just not sure that I buy into it. I mean, I would love to buy into it, but I just don't think that I believe that with everything that I heard about the development of a vaccine, that it will come so quickly and miraculously. So that's why I am short the market. I don't see any other reason than to be short the market, because it's so unsubstantiated, and it's masked in scientific talk, but it just feels a little bit too good to be true, I'm afraid.
Okay,
so
now what?
I tried. I had a pretty long night because I've been up sweating this position, and I knew that it was going to have a positive vibe in the morning in the Europe session. But it feels to me as if the market is somewhat coming to its senses now. At least the Dow is some 300 points lower than we were after the spike of last night.
Well, at least your crude oil contract, I know you've been very bearish that for some time. We're making new lows in the crude. It looks like we're heading towards $14 a barrel. Is that your ultimate target, or do you have anything outstanding in the crude oil that you're looking at?
No, I don't have anything outstanding in the crude oil. I'm very happy that I had the crude oil position, because I got pretty badly run over by the Dow position I had last night because of the spike up, which is why I'm hoping for a resurrection of the trend lower today. But with crude oil, I think crude oil will just compound to the situation. And it seems to me that people want to portray that the stock market is a good opportunity to buy. But with everything that I have done, and all the work I've done, I see it as a good opportunity to sell. I don't believe that we are headed up for higher prices. I just cannot chart-wise get behind that argument.
Well, it certainly makes sense. Listen, I know you're very busy this morning. We just wanted to get your quick update of what you thought was happening. We want to wish you the best of luck, and I hope you recover everything like you always do. I might add, you always do. So thanks for joining us, buddy, and we'll have you on soon, okay?
Thank you so much, Larry. All the best.
You
Take
bet.
care. Bye-bye.
You bet.
Thanks. Bye.
Tom, you bet. Tom Hugard, Trader Tom. So that's his 2 cents worth. So we'll see how that works out. We're now down just about 45 handles from the high that we made last night at 28.85, and we'll see whether that's going to do anything. Now, what's interesting is, folks, the bond market. We had a two-handle break in bonds yesterday, and we've retraced almost all of it. If we get above that 182.20 level, this could set up some pretty big moves to the upside, which means lower interest rates possibly. So that's going to be a very, very interesting one to pay close attention to for sure. So there's a lot of things happening. I do want to share with you. These are some of the things. This is where I have a real problem, folks, and this is with the Elliott wave stuff. I want to get this up here to take a look at it. You'll notice here, this is an Elliott schematic, and you'll notice all these little patterns that they have there. Folks, when I started looking at Elliott, this was long before Prechter ever worked with Robert Frost. This was back in 1970 when John Hill first introduced me to this, and he told me that he had a hard time the way they looked at it, because he basically showed me that when you have a 1, 2, 3, 4, 5, that was nothing more than an ABCD. And all I did, you can see on the diagram on the left where it says 1, 2, 3, 4, 5, that's nothing more than a 3-drive pattern, ABCD. I mean, we just saw it in the S&P. We just saw it in the gold. I mean, my goodness. I mean, they happen all the time. They don't work all the time, but when they do work, this is one of the things that patterns do, is they give you the place to know where you're wrong, and that's what you're looking at. You want to try to protect your risk when you're watching these things. Now, they do have predictability. We know that from Dr. Andrew Lowe's book, The Non-Random Walk Down Wall Street. And the other thing that he proved is that not only do they have predictability, but they repeat, and they repeat a lot. And that's one of the reasons why we look at these things. It was A.J. Frost, not Robert Frost was the poet. Okay. Anyway, that's neither here. Folks, I have to stop here for just a second. I have to do something, and I will be right with you just a second. I have to change an order. Okay. Hold on. Hold on just a second. Otherwise, I'll make a mistake. Maybe this will work. I don't know. Okay, let's move on here. Okay, all right, got that taken care of. Maria's mentioned that it looks like it's acting like a big bear. We don't know yet, but I would say this, Maria: if the market would close lower and possibly sharply lower today, that would be the big grizzly. That really would. And one of the reasons, one of the heads up that I tried to mention to you is that you're looking at the number one stock in the world. Let me do the Dow Jones. Well, let's do Apple first, because I want to show you the Apple. This is the number one stock in the world. I mean, more people own this than anything else. And look at this. We had an ABCD pattern here on Tuesday, Wednesday, Thursday. And look at this. This has not gone above it by $0.50. And now it's down. I mean, this is a sign that, and it's, right at the 61, but it's a perfect ABCD. So I don't know if that means anything, but that's just telling you that, what's really happening. So let's sort of watch it. That's all I know. All I know are these charts, folks. I look at those little patterns, and that's really what I look at. When you start talking about things, it's, we'll have to be waiting and seeing what's going on. I don't know. And I don't do many moving averages, so I can't help you. Anybody? Oh, we had a question here about palm oil from someone. Where was that question about palm oil? Who was it? Somebody in New Jersey, I believe. Where was it? Looked like I lost it. Can't. But anyway, a question about palm oil, and he said it was near a bottoming process. Well, if you're looking at palm oil for a buy, I haven't charted it. I haven't charted it in 25 years or more. I used to do canola, but I don't do that. All I do is I just look at the soybean oil, because that's the big one. So that's it. Now let's take a look at Maria. Thank you very much. That's very funny. But the palm oil is an exotic oil. So I believe it's a premium, and it's a premium oil. It costs more, at least it used to years ago. It might be like platinum. It used to cost more. Now it's $1,000 under, the price of gold. So that I really don't know. Well, either here or there, but anyway, that's what we're paying attention to. So we'll see if that's going to be the case, and we'll go from there. Hold on just a second. I got to do some. I'm putting in orders, folks, so I can keep an eye on what's going on here. There we go. All right, there's what we're going. Okay, any questions? We got another break coming up, 877-927-6648, and then we'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're back. And I wanted to share the chart of the Treasury bonds. Yesterday, we were looking for that sale up there at that 182.16. You see that we had the gap down during the time when the proposed, I say proposed because I don't know what they're doing over there in Washington as far as coming back to work, but I think it's a lot better because, there are things a whole lot worse than death, and, poverty happens to be one of them. Remember the words of William, what was his name? Oh, shucks, I can't remember the old guy from Braveheart. William Wallace. All men die. Some men never live, so you got to live your life as the way you see it. You notice here in the Treasury bonds, we came down 2 handles, and we stopped at the 50% retracement, and now you see we're back challenging that really strong resistance area at the 182.20 level. Now, should we close above 182.20, that would be relatively bullish, I would think. Now, some people, like Ray Dalio, are very, very bearish to Treasury bonds because they believe what the Treasury is doing, along with the help of the Federal Reserve, is not really very helpful to our credit ratings longer term. By the way, I do have to share a really interesting thing from one of our friends over in Italy that is going through the lockdown. I hope you appreciate how tough it is over there on the Italians, so you'll be able to see that. You'll see what's happening over there. That happens to be one of my students and his wife, and that's a joke, folks. Anyway, that's neither here nor there, just trying to make a little bit of levity. Now, we want to switch over. We had a question about the bit. Let's get old Bitcoin up in here because these blockchains are going to be very, very important longer term. We're still trading up here around the 7,000 level. Folks, it's extremely important that Bitcoin does not go below 4,000. If it goes below 4,000, it's going to be very, very bearish. But look at how it holds the numbers. I mean, the high in November was a 61% retracement from the high in August. You'll see that the 1.618 expansion was a perfect expansion from the low in November. The one in November was a perfect 1.27 expansion from the one in October. I mean, just you've got to watch these because, and we're only looking at, basically four ratios, 618 and 786 for retracements, and 1.27 and 1.618 as expansions. So that's that's what you're looking at. So that's basically one of the advantages, folks, of Oh, by the way, one of my favorite actors passed away yesterday, Brian Dennehy, if you'll remember him from the FX, 2 movies with FX, and he played a lot of, he was a really rough character. He lived in New Mexico, and I used to see him at the track down at Hollywood Park and Santa Anita during those years at Drexel, and he would hang out with Tim Conway and Don Adams. But anyway, it was sad to see him pass away. He was only 81 years old, but he'd been in relatively. Yes, he played in First Blood too. Anyway, but it was interesting to see that he had passed. A really nice guy too. Gosh, he was just as friendly to everybody. It really didn't make any difference. He treated everybody equally, and he lived a good life. And hate to see him go so soon, but it had nothing to do with this. Hey, by the way, just a minute. Judge is ruling. We have to sign a lights are on, baby, down in Boca Raton, Florida. Guess who's going to be released from the hospital tomorrow? Mark Twentyman on death's door a week ago Sunday. If you'll remember, we were talking about it. This was going back on the 6th of the 5th of Palm Sunday is when he was on life support, and the priest gave him last rites, and now he's going to be released. It looks like Sunday morning. It was the big thing that turned it around was they gave him an antibody shot from one of his friends who he thinks he got it from. So Mark is going to make it. I've never met Mark. I met Lee. Mark's older brother, he's a CIA operative. He lives in Santa Fe, New Mexico, but we won't go into that. Let's move on. I was very happy you guys were able to see that what you call is that he's doing really well, and I appreciate all the white lights because he's the only person that we know that has the virus, that had it. He was quite, and actually he's a friend of someone I know. I've never met Mark, so I've never met. I don't know if anybody else have met any, but that's that's neither here nor there. So let's remind that. Okay. Antibody transfusion is the last resort, but it worked though, Bill. That's the whole thing. Even if it was the last resort, it did work. Someone's asking a question about the hogs. We've got June hogs trading at 43.05, folks. That's way below the cost of production. And the problem is, with Smithfield there in South Dakota, not working right now, we're going to have meat shortages here pretty soon, if not immediately, especially in the pork products and in cattle too. They can't even give away pigskin and leather from the cow skins. I mean, it's just incredible. The price they've never been this low. So it's it's a big quagmire out there. Like Tom Hugard said, he's not buying into it, and I have to believe that maybe that's the same thing that we're looking at. I'm not sure. Let's just take a quick look here. Okay, here's a little early Christmas present here, folks. Let's get this up here. I'm going to share with you because we got a little time to go. We got a weekend coming up, and we get to stay home working and stuff. Smithfield is owned by China. You're absolutely correct. The Chinese bought that firm, I guess, 2 years ago, didn't they, Mr. Z? Here is the July corn, folks. This is what we're looking at here. If you notice, we've had this target of $3.25 a bushel in here for quite a few months. We made that 3.82 retracement up there. Now, the reason why you become a farmer down here, folks, you don't have to buy the farm. You just lease everything. You just buy a contract. They're going to give you 200 acres of the purest corn you can get if it comes in. And if it doesn't come in, that futures contract is going to be worth a lot of money. Look at last May, folks. You see in May 1st, coming up to May 1st, pretty soon, we went from $3.95 to $4.80. That was a $4,500 move in 3 weeks. So I don't know if that's going to happen this year, but look where we are. We are a tad oversold. We're below the cost of production. So this is where you become a farmer. This is where you pay your money and take your choice. That's basically it. Now in the oil, we've had the June is now the spot contract. The open interest is dropping dramatically in the oil, which is actually strengthening. But the June is trading backwardation. It's trading $6 a barrel more than the than the May was. So that's another thing. And, I got some information today that the Federal Reserve was going to start buying crude oil in order to prop up prices. And then someone told me that it was fake news. And so I don't believe anything. So let's pay attention to that. Follow the charts. They'll lead you down the highway of profits. That's really what you're going to be looking at. So let's pay attention to what the prices are doing and not worry too much about the rest of the stuff of what's going on. We're going to take a little break here. We'll see what we're doing. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a chart from Shane Smolian, the wolftrader.com. wolftraderfutures.com, and it is the solar cycle for oil. You can see here that he's looking for a bottom sometime early next month, June. So we'll watch that to see. Remember, his work is pretty good. It's not 100%, but by golly, it's not good to fade it. So we'll keep a close eye on that. And when we have him on next week, probably we'll ask him about it, but it's certainly been acting correctly. We did make new lows in the May contract. We got down to, I believe, 18.20 or something like that. And we got down to 24 and change. There's a $6 difference between the nearby oil which is May, and the second month, which is June. June is now taken over as lead month. It has open interest as at least 3 times what it is in the other. And the open interest is saying that we're near a bottom in oil, because the open interest is dropping, and when prices are dropping and open interest is dropping, it means that sellers are not coming into the market. Of course, buyers aren't either, but that's what the open interest figures say. So we'll watch oil, because we believe that there's a possibility that we could make $14 a barrel in crude oil. We've been watching that on our prices for futures, for quite some time. So we'll see whether that's going to be the case. I'll bring this up. Well, it's actually $12 a barrel. We'll get it up here to look at. Well, we're trading at 18 now, and we're looking for. Well, it's actually $13 a barrel. I put it in close to 12. You can see it's above 12. So we're not too far away. I mean, it's had a heck of a run. So we'll see. Now, look, you see that 3 drive to a top pattern that we had back there in 2019 in August? Boys and girls, that's what you're looking at in the E-mini S&P today. Of course, it's only on a 4-hour chart, but that is the exact same pattern. So, there's going to be some rocking and rolling here. One thing about these markets, volatility is here to stay, boys and girls. That much we know for sure. And we're going to keep, watching the patterns, and hopefully we'll find some really nice trade setups. But you can't find any better than that July corn, because that's got Mother, God, and Country written right over the top of it. So live every day in an attitude of gratitude, and may God bless.